All right, so as you can see, building up architecture is what we did. It's an architecture, obviously an architecture service that is provided for local companies. Just a little bit of information. We have the owner of the building up architecture as Bob Bradley. As you can see, he's the owner of Building Up Architecture, and he's an architect. He's 70 years old, and that's going to play a little bit of a role in his tax computation as well. And then the other person is Carrie Bradley, who is his wife, the spouse of Bob, and she's the owner of Studley's Tuxedo Rental, and she is 68 years old. So we're looking at these two companies and how, since they're husband and wife, to decide which one would be the best entity to form.
Okay, so they're currently set up because they're both individual owners of these two separate businesses. We decided to take how they're currently organized and compare that to another entity. When we were doing our research, we felt that how they were currently set up was very efficient for them. So we have the architect build them up as an S Corp with the dress rental as a C Corp. And we chose to compare this to a sole proprietorship. One of the main reasons is because the partnership just didn't make sense. Each was an individual owner. There was no other partners or people that were involved with the company. And also when they were doing their tax returns, they had the individual tax return. And because they're married, there was a married filing jointly tax return. So we felt that the sole proprietorship was the best entity to compare this to. We didn't do an LLC just because of the complexity of the tax laws and the fuzziness of what was going on there.
So what we're going to compare here, this is from their individual tax returns. They gave us a copy and we're able to evaluate it at the individual level. So if they'd done a sole proprietorship, and all other things are equal, they would have listed $65,436 from both businesses. Compare that with the S Corp and having the Studley's Tuxedo formed as a corporation. They would have shown a pass-through of $16,522. The corporation itself showed a net loss, so there wouldn't be any tax paid there. And they had net W-2s of $24,750. So it's quite a difference from the $65,000 that they would have shown had they both been sole proprietorships. Evaluating it on the self-employment tax. Sole proprietorship pays complete self-employment tax, so $9,245. Corporation doesn't pay self-employment tax, they have their own tax. And the S Corp doesn't pay any self-employment tax unless there are guaranteed payments, in which case there were not. So they don't pay anything. So just if they stay with their current setup, that's a total tax savings of $9,245, just looking at the self-employment tax.
For the sole proprietorship, their cost of labor, the $19,714, cannot be deducted when calculating their cost of goods sold, whereas in the S Corp, when they're calculating that, you can deduct it, so that obviously impacts, their ending net income and their taxable income. And then finally, some other factors when we're talking about each. With the sole proprietorship, it is easier to maintain and establish. It's just more simplistic. There's one tax return. We talked to an accounting tax preparer, and he said a return like that with two Schedule Cs and with one 1040 would run about $300 to $500. And some negative is, they're still fully liable, and it terminates upon their the owner's death. Now with the S Corp and the corporation, they don't have any liability. It'd be easier to transfer just because you can sell some stocks and some shares. However, their tax prep costs are going to be more, and because there's going to be 3 returns involved. There's going to be a 1120S, 1120, and 1040 for the two corporations, and then their personal return. And again, the accounting person that we talked to said it'd run about $800 to $1,300 for that. And just because of the complexity a little bit about getting that set up.
So the bottom line, we looked at what they owed in taxes. Setting up as a sole proprietorship, their total tax liability is $16,244. setting up as their current organization, the S Corp and the corporation, they only owed $7,299 of tax. So that's a total tax savings of $8,945. And that's not even considering the amounts they would have paid for their tax returns. Because that amount is so high of tax savings, even if we factored in what they would have paid for their tax returns doing as an S Corp and a corporation, they still come out on top saving taxes with their current organization.
So our indecision is that after reviewing it, they should just maintain it the way they have it set up. They have it set up pretty efficiently and it's running pretty well for them, and they're already saving a lot of money through their setup.
Are there any questions about that you guys have?
Good job.
Excellent.
Oh, yeah. Over.